Hello traders, David here. Welcome back to part 2 of how gold really moves. In the previous video, we talked about the true behavior and characteristics of gold. Today, we're going deeper into how to actually follow that movement and look for better trading opportunities in the market. Returning to the gold chart on the 1 5-minute frame, now I will shrink this chart. In fact, when trading gold a lot, I notice a characteristic, which is that in gold, once it moves, it will move very strongly. It creates waves that go continuously. There, like here, you can see, once it moves, it will move very strongly. It creates waves that go consecutively, increasing in a straight line or decreasing in a straight line. Here, increasing in a straight line, increasing in a straight line, then decreasing in a straight line. Here also decreasing in a straight line, decreasing in a straight line, increasing in a straight line. And actually, if anyone has traded gold a lot, you might also feel this. Maybe that is also the reason why many people say gold usually moves strongly. However, from that characteristic, we might fail to turn it into an opportunity for us to come up with suitable trading rules for this gold, when we already know that once it moves very strongly. Then the first rule is that we should not have the mindset of trying to trade against the direction gold is moving, meaning the higher it goes, the more you sell. I know there are many people who make this wrong mindset, leading to the consequence that they have to hold losses a lot. Like on this chart, it is the sideways phase with support and resistance, because as we saw earlier, this phase is located above the resistance zone of the sellers on the larger long-term frame. Therefore, the two sides are still struggling a lot. However, if we look before that, when it enters a trend, it moves very strongly. Therefore, the principle when trading gold is that we will prioritize trading in a breakout style, meaning trading following the direction of gold, especially following the direction of strong waves, the leading waves. And when it breaks a certain resistance zone, we will find a point for a buy order. That, for an uptrend, I give such an example. Like on this chart, we can also see that there are beautiful entry points. For example, like here, here, here. Quite beautiful breakout points. I am just pointing them out quickly here. As for the specific characteristics, I have shared specifically in previous videos. In this video, we focus on looking at the typical characteristic of how gold usually moves. And when we feel it begins strong waves, for example, from this segment, then at that time, we can enter smaller frames, such as the 5-minute frame or 1-minute frame, so that we can find better entry points. Because essentially a strong wave on a large frame, within a small frame, it can be a structure going up and down. Beautiful structures so we can find entry points. Therefore, when we enter a smaller frame, we can take advantage of the momentum, the buying force, or the selling force that is pushing up strongly, especially when on a larger frame, it just broke through sideways price zones. Like this zone, for example, here. For example, these areas. We see that it starts to create a strong force pushing up. Then at that time, we enter the smaller frame. We search for entry points to catch the subsequent continuing waves. Those are just a few examples from how we look at the characteristics of a specific trading product. Then we come up with a way to deal with it. Here, we can draw out these strong downward wave zones. After that, we enter smaller frames to observe, so that we look closer at what characteristics it has. There, like on the 1 5-minute frame, we see that it only has one wave, but when entering the 1-minute frame, we see it as a whole long structure, and we can apply to find good entry points like breakout trading, trading when the price pulls back. Here in this wave as well. In M15, it is just one wave, but in M1, we see the upward and downward structures more clearly. Of course, observing only gives us an idea, so we can build better entry methods. However, After that, we need to have practice time too. Not just finding the characteristic, understanding the characteristic, and then being able to apply it immediately. Those are some examples so that from a characteristic of a trading product, after that, we can build better entry rules ourselves. Of course, you can actively find other characteristics yourselves and also build other entry rules yourselves that suit you. Because actually learning doesn't necessarily only come from my sharing. It might just be an idea for you so you can adjust yourselves. Observe yourselves to make it suitable for each person too. Active learning like that is how we can progress quickly. Even, for example, the characteristic of the GBP, USD pair is the same. If we see it frequently sweeps, for example, frequently sweeps the bottom before it goes up. When you also encounter this case a lot, you can try from this to come up with an idea, which is that we will choose an entry point that still follows the momentum, follows the trend, but the entry point must appear after it fake breaks. It sweeps past the bottom once, for instance. From observing that we see it repeating many times, we will come up with an idea to build a rule. And then, when having that idea already, we try to statistically analyze, specifically backtest that idea, to see how its effectiveness is. If it produces good results, then I apply it. That is exactly the way we learn actively. Then the final advice of this video is that I hope you guys will be proactive in everything. Because in this market, passive people are the ones who lose money most easily. Because I meet a lot of passive people who listen to others, give very large amounts of money to others for them to trade on their behalf. They invite them to untrustworthy exchanges, then ultimately lose all their money. And especially the more in the early stages, the stages of starting to research, the more they lose large amounts of money. And that's it for today's video. Hopefully you now understand gold's behavior a little more clearly and how to build better trading ideas from market observation. I'll continue sharing more market insights and setups in the trading room, so feel free to stay connected and follow along. See you in the next video.